Hello, everyone. Welcome, and thank you for joining us for our latest episode of Global Conversations. I hope you're all well. My name is Ali Zainab. I've been with Investcorp for the last 13 years, and I currently look after our client relationships in the United Arab Emirates. Today's discussion will be focused on three interesting areas making the headlines recently: Bitcoin, big tech, and bilateralism. I'm thrilled to introduce our guest speaker, leading economist and author, Dr. Linda Yueh. Dr. Yueh is fellow in economics at St. Edmund Hall at the University of Oxford, adjunct professor of economics at London Business School, where I was fortunate enough to be one of her students, and visiting professor at the London School of Economics. In addition to serving as an advisor to the UK Board of Trade, Dr. Yueh has also advised the European Commission, the World Bank, and the World Economic Forum at Davos, among many others. Dr. Yueh is also a widely published author. Her latest book, The Great Economists, has been recognized by The Times and Newsweek as one of the best business books of the year. This afternoon, Dr. Yueh will be in conversation with Rishi Kapoor, Investcorp's co-CEO, who has been with the firm for more than 25 years and who's no stranger to most of you. Rishi oversees our private equity businesses in North America and India, as well as the real estate, credit, absolute returns, and strategic capital divisions globally. In 2019, Rishi was recognized by Forbes Middle East as one of the top 10 Indian executives making an impact in the region. Rishi will be moderating our discussion with Dr. Yueh today. So without further ado, I'll hand over to you, Rishi.
Thank you, Ali. First of all, greetings, everyone. To those of you that are watching or listening live, greetings of the day. To those of you that choose to watch this later on at your leisure, greetings again. I do hope everyone has been keeping well and healthy, both mentally and physically, of course. Professor Linda, it's an absolute pleasure to welcome you to Investcorp Global Conversations. We've been looking forward to this opportunity to have this chat with you for a long time. And we are truly fortunate, and our watchers and listeners are truly fortunate to have this occasion come around almost a year to the day when this whole pandemic started. Now, we've chosen a topic for the conversation today with the three Bs: Bitcoin, bilateralism, and big tech. And although we didn't know when we chose the topic that Elon Musk was going to take $1.5 billion and plunk it into Bitcoin, it certainly seems pretty topical right now. But then on the other hand, I'm sure people must be wondering, what's the connection between these three Bs? So maybe I can request you, Professor, to take a few minutes perhaps and connect the dots for us to start with, and then we'll just go from there.
Thank you very much, Rishi. I'd be very delighted to do that. And it does feel like we've been planning this for some time. So I'm absolutely thrilled that we're doing this now in this virtual setup. And it was absolutely wonderful to see Ali doing so well since his LBS days. So I will take just about 10 minutes, not more, to draw the links between these three big topics. And I'm going to do so, I think, in two ways. I think one, I'm going to describe how these are potentially the big shifts. And then I'm going to look back through history, drawing on the lessons from history from The Great Economists, this book, my latest book, which actually looks at 250 years of economic history, when there have also been times of massive shifts, a complete change in the paradigm around how we could think about money, technology, and indeed geopolitics or geoeconomics. So in each of these three areas, I'm going to focus on that, whether it is a big shift and what we could learn if we look back through history. So I'm going to start with Bitcoin. But before I actually start on Bitcoin, I'm going to give you a caveat from a great economist, J.K. Galbraith, who said, economic forecasting exists to make astrology look respectable. So in other words, even in the best of times, trying to look ahead and trying to make these forecasts is difficult. And we obviously, as you rightly pointed out, we don't live in normal times. It's a very challenging time, and it's a time of immense change. So, and the second caveat I'm going to give you is about lessons from history. Now, this one is not a quote from a great economist, but from Mark Twain, the American writer, who said, "History doesn't repeat itself, but it often rhymes." So there are potential lessons we can draw, but obviously we need to make sure it's appropriate for our current day context. So with those caveats, I'm going to start with Bitcoin. This cryptocurrency increased by 300% in value in 2020. And lest you think that was impressive, first few weeks of 2021, it's already risen by over 50%. But when I cast our mind back, on November the 3rd, it was worth around $14,000. But it soared to over 40,000 in the first days of January. And this was before the Tesla revelation that you mentioned. So it was hitting record highs throughout 2021. And then when Tesla said they would accept this cryptocurrency, this Bitcoin, for payment, that's when it hit a new record high of around 45,000 and giving this incredible surge in terms of value. So how significant is this a shift? How significant is this? I want to broaden this out now from Bitcoin to cryptocurrencies in general. One of the traits you have to serve as a privately issued source of money is that it needs to be accepted for payment. And that's why the Tesla revelation was so significant. It gives Bitcoin in particular a boost, and probably also it's going to spill over into other cryptocurrencies. But one of the things I would stress is money needs to be a good store of value. So clearly the volatility of Bitcoin, I described its rise. I should also mention that in the early days of 2021 this year, Bitcoin fell by as much as a fifth in one day. So it's the degree of volatility, which, as you know, in markets, if you drop by 20%, that is a bear market. And yet Bitcoin has this massive fluctuation. So I think that's one issue to think about, whether or not this is truly a big shift and that's going to stay with us. I should also say, privately issued money is actually not a new concept. Milton Friedman, the great economist, essentially pointed out you could have privately issued currency so long as it has all the characteristics of money. It's accepted for payment, it's a store of value, and people have faith, obviously, in its using it as a currency. And that's, I think, worth reflecting on the kind of start of Bitcoin and obviously other cryptocurrencies as well, which is the printing of money by central banks has put a greater focus on these currencies, which are, especially Bitcoin, which is thought to be limited in quantity, and that helps shore up its value. And I think that digital part is in connection to the second theme, which is around big tech. The digital platforms and the tech has enabled essentially cryptocurrencies to develop as they have. The underlying technology of registering the value, for instance, in blockchain, is also extremely important to think about. So, is this a big shift? It's clearly part of this digital transformation that's being accelerated. And I would say it looks like a big shift because the central banks are not getting into the act. So digital currencies are being trialed by about 60% of central banks around the world, and a number of them are actually trialing e-currency. So for instance, China, as part of Lunar New Year, has issued an e-yuan. So the Chinese yuan is now issued in digital form. And this means that the central bank digital currencies have now become, and could potentially be the case for other countries, but in China, it's become a competitor to payment providers, online payment providers, like Alibaba's Alipay and Tencent's WeChat. So if the central banks are seeing this technology and digital currencies shifting into this cashless society, I think there is a shift here. I wouldn't understate how quickly the changes are happening, but I think with all the different players involved, this is a shift certainly worth watching. And this tech point is my link to the next big shift, which is, it's hard to remember, but a decade ago, even the rise of e-commerce smartphones, I mean, it was there, but it wasn't nearly as big as it seems to be. And one of the indicators of this, the rise of big tech, is actually by looking at what makes up the bulk of trading, of dominance in markets. And one indicator is that the top 5 tech companies, Microsoft, Apple, Google, Amazon, and Facebook, they make up 18%, around 20% of the US benchmark index, the S&P 500. So this concentration is obviously something that lots of has generated competition concerns, and that's one of the issues to think about. But I'm going to say this about this big shift, which is, yes, it is enabled by the tech trend, but just like Mark Twain said, there is a lesson from history here, which is, if you look at Joseph Schumpeter's creative destruction theory, he was looking at the turn of the last century in the United States, when you had these massive companies, the trusts, US Steel, Andrew Carnegie, these huge, huge companies. And his creative destruction theory came from careful study of those companies, including also the German system, the Mittelstand. And what he concluded was, these big companies were dominant, like they are today in the digital space, but it didn't stifle competition. At the same time, there were hundreds of startups that eventually meant creative destruction. The best ones survived. It's very Darwinian. But the lesson from history there is, does the ecosystem support competition? Is there financing available so that markets are contestable? So a few traits to think about today in terms of assessing whether or not this is a shift towards big tech or just a shift in general towards providing essentially the ecosystem that we saw in the early 20th century that enabled the United States to be technologically innovative and still have big companies. Does that ecosystem exist? So one is financing. We see growth of capital market financing. That's one driver. The other one is you have very low startup costs today. It's easier today than it was to set up a railroad or a steel company a century ago. And to give an example before I move on to the last trend, fintech is an area which has potential to really capture this, both the startup dynamic and then the existing big tech dynamic. A lot of fintech firms are small, they are innovative, and they're bridging essentially underbanked populations. And for instance, e-payment, M-Pesa in Kenya has actually raised the total factor productivity of that country. So we're not talking about small changes, we're talking about big shifts. And the reason I use that example is that that was a partnership between Vodafone, the UK company, and Safaricom. So it was joint venture, it was big and small, and it tapped into the fintech moving into the space. So the question we should ask here is, it looks like it's a big shift in terms of tech, big tech and startups. Is the ecosystem sufficient? Is there a degree of competition there to make sure these markets are truly competitive and can bring about this creative destruction the great economist Joseph Schumpeter mentioned? And then I'm going to finish with bilateralism. So how does this link to bilateralism? The other big change in the world is this growth of bilateralism. Now, is this a big shift? I think it's a shift in response to a couple of things. So one is all of this growth of tech, the digital trade that's involved, the movement of goods across borders electronically, the growth of e-commerce. These are the fastest growing areas of world trade, but multilaterally, the rules-based system doesn't really cover these areas. In fact, GATS, which is the main multilateral provision under the World Trade Organization, remember, that was actually done in 1995, and that predates the widespread use of the internet. So there are real gaps. So the multilateral system has fallen behind what's needed to facilitate this trade, and multilateralism hasn't been able to further that because of a couple of reasons. One is great power competition. The US and China find it hard to agree on global rules. in this area and other areas. But also, these issues are difficult. This is not about a tariff on an export of a good. It's about agreeing rules of data, agreeing rules and regulations which differ between countries and regions. So the US and EU have very different approaches, for instance, to data protection. So all of these things mean countries are moving to facilitate trade bilaterally. I should stress that bilateralism doesn't preclude multilateralism. So it's multi-layers of approaching how you can support global rules to facilitate trade in this, especially in the tech area. It's practical and doesn't have to be protectionist if it's done in a bilateral, multilateral, and then what's called plurilateral or minilateral, where a group of countries get together to try and fashion some rules, which can eventually then become a multilateral system, hopefully, in the future. But I would say geoeconomics is the challenge of our time. And this is an example of it. So economic and non-economic issues are now very closely linked. And I expect that will continue for some time. So the rise of bilateralism, I think, is a big shift. And it is in reaction to all of these complicated forces. But that's what links these three issues: underlying tech changes and really, I think, the big shifts that these issues capture will be with us in some form, maybe not exactly these particular issues, but I think we are in a time of rapid and profound change. And the acceleration of tech during the pandemic, I think, has been evident for all of us. But what I'm going to conclude on is just a thought around, seeing these shifts. It's about thinking about how we strategize around it, how we take advantage of it, how we guard against the risks, mitigate the risks surrounding it. And I'd like for us to think of this as a great reset. We are all forced in many ways to change over the past year. Can we think of these trends as more change, but fitted into an overall system for the 21st century, that tries to redress what hasn't worked, acknowledge what isn't working, but then think constructively about how we can make the most of the opportunities in the 21st century, which is already and will continue to be very different than the 20th. So I'm going to pause there, Rishi, and look forward to our discussion.
So that is fascinating insight in terms of how you weaved a common thread through those three seemingly dispersed, nevertheless tectonic shifts that we are witnessing real time at the moment. Let me pick up from in terms of reverse order with the bilateralism. Many believe, I think, professors, that Brexit is the poster child of the shift away from the new word that you coined, plurilateralism, to bilateralism, which doesn't necessarily exclude multilateralism and plurilateralism, down the road. Is that how you see Brexit? Do you think Brexit was prompted by a recognition that in the world order of tomorrow, with the expected dominance of services and in particular tech, and trade around those services and tech, which cannot be covered under archaic rules that were put in place in the 90s, Britain is better off by seeking to implement bilateral trade treaties with like-minded partners?
Yeah, it's a good question. I think, sitting here in the UK, 4 years on from the EU referendum, I think I've long ago concluded that Brexit is it's a political issue. There's economics is involved, but I think a lot of the drivers are complicated, and a lot of it is political. And I think it feels like, in fact, we're about nearly 5 years. It feels like it's been an issue for longer, but it's 5 years, which I suppose is quite a long time. So I think, what might it say about kind of forming global rules? See, it's one of the challenges, I think, in terms of a fragmented system, the role a country could play or a bloc could play. So I mentioned there the impasse over data. So if we think back to TISA, which is the main plurilateral vehicle, sorry about these terms, especially when you start talking about trade, plurilateral, minilateral, it just means a group of countries, not all countries. The main vehicle for it was TISA, launched in 2013, where a group of countries, actually 23 economies, which included the EU as a bloc, tried to launch a round on services liberalization to upgrade GATS. Again, GATS was done in 1995. There have been individual efforts to liberalize. So there's several, I would say, streams within the World Trade Organization around domestic services regulation, around e-commerce. There's the Osaka track. So there's kind of various rounds, but there hasn't been a big round, the equivalent of a Uruguay round, for instance, that actually launched the WTO. So what TISA was trying to do was to take countries with, which accounted for about 70% of services in terms of world GDP, and use that to launch a new round to upgrade services and digital trade. But the impasse there was between the EU and the US and there's other countries with these issues, but they couldn't agree on data rules was one of the reasons. So, if you think about GDPR in the EU, and then you think about a very different data system centered on corporations in the US. It's just different regulatory systems. It became very hard to find middle ground. So the UK was obviously part of that effort as part of the EU at the time. But now that the UK has left the EU, it has this, it's got a vested interest really in promoting global rules around services and digital, because the UK is the world's second biggest exporter of services, is one of the top ICT economies, it competes with the US and China for fintech investment, for instance, in terms of this area. So it's in the UK's interest to try and find plurilateral global rules, signing up countries to find ways to make trade, facilitate trade a bit better. So, sitting, as it were, where it is, world's fifth biggest economy, with these technical expertise, bringing in private sector firms, I think, it's certainly worth attempting, to build agreement on technically advised specific issues, whether that's around a tech rule or around services, which can build up a body to start to get other countries to sign up, as it were, because if it's centered on expertise, so in other words, you need private sector companies who really know what the standards should be feeding into the process, then it's quite possible for the UK to play a kind of broker role in this. Of course, it's not easy, to get agreement between, for instance, the US and EU, certainly not between the US and China. So it's a difficult task, but given the impasse that we have at the multilateral level, I think the UK is in a good position to drive this, so long as it brings in private sector expertise, so that the agreed standards are as global as possible. And that's the benefit of bringing in multinationals who know what the issues are as they operate across borders, with policymakers and also consumer and other interest groups to make it a consultative process. But regardless of impasses at the kind of policymaking level, we all know this trade is accelerating across borders. We know there's impediments to doing this. So there is a real, I think, need for a country to play that role. And the UK finds itself after Brexit in a position to be able to do that.
Yeah. I would tend to agree with most of that. But you referenced China, and no conversation relating to big tech and multilateralism can be held nowadays without a reference to the US-China relationship, not just around trade, but also around potential autarky almost, particularly as it relates to the big tech domain in either country. Now, let me ask you, you were also referencing, Linda, earlier, Schumpeter's views around creative destruction. Do you think, as you reflect on the remarkable growth trajectory of China, the story over the last 40 years in particular, do you think China itself has the building blocks today, that ecosystem that you were referring to, that facilitates innovation, entrepreneurship in a sustainable manner, such that it can, in fact, continue to progress on that trajectory that it has led the way for the rest of the world on?
Yeah, it's a great question. Another great question. I think that is the question that China would. China is hoping for the answer to be yes. The evidence on it is difficult, and the reason I say that is because in my book I actually have a chapter called "Can China Grow Rich?" So the focus of the last umpteen years has been for China to become prosperous and overcome the middle income country trap. So just to explain what that is. In 1960, there were 101 middle income countries. By 2008, only 13 of those had to become rich, join the ranks of high income countries. Most countries in the world are not rich or prosperous. They remain middle income, upper middle income. So for a country the size of China, 20% of the world's population, to become rich, that is a significant challenge and a game changer, obviously, for the world economy. To do that requires China to have the innovations that can push up the technology frontier. So in other words, quite a lot of countries, and China is still a middle income country, catch up to the technology frontier by adapting existing technologies. But generally, the countries that have grown rich have been able to innovate and push up the frontier. So the evidence of whether China can do that is difficult to discern because typically, say, we would look at patenting. So patents and licensing data. If somebody's willing to pay you for your patent, that's an indication the innovation is valuable. And that data exists, for instance, for the United States. So you can track where the innovations are really valuable and which are not. So that data doesn't exist for China. There's different types of patents, of course, but the use key component, we don't have that data for China. So this leads to, I think, much more impressionistic views of China's innovation. So you'll have, people who look at Alipay, look at, WeChat, both of which I've already mentioned, which comes from two of China's biggest tech companies, Alibaba, Tencent, and say, this is very good technology. It's very more than globally competitive. And then others will look at other parts of China and say, well, actually, the ecosystem isn't really there. The financing is skewed towards areas which may not ultimately be that innovative. It could just be kind of faddish. There might even be a bubble in the VC community. So without sort of comprehensive data, at least on formal innovation, and this doesn't even capture all the other kinds of innovation which are really valuable, which are hard to measure for any country. It's just really hard to conclude how innovative China ultimately is. There's no doubt there are innovative Chinese companies, but even the innovative Chinese companies would say you would need many more of us in order to get a country the size of China to become rich, to be on that trajectory. So that's one of the unknown questions, I think.
But they're certainly spending, I think I read somewhere that they're now spending more on R&D in China than they're spending on R&D in the US. That would certainly seem to indicate that they're pretty serious. But not only beyond being serious, it would also seem to indicate that that first step of having these very large, initially innovation-driven global champion corporations that can, in fact, provide that steady stream of investment into R&D, that's already taken place for China. Would you agree with that, Linda?
Yeah, so there's quite a lot of R&D investment in China. It's a real focus of the Made in China 2025 strategy, which intends to bolster and invest in domestic innovation so that 70% of the inputs into high-tech sectors are actually domestic. And that kind of level is almost a doubling from when the plan was launched. And if you look at the top patent filers worldwide, or the top 5 companies, 3 of them are Chinese. So there's a lot of spending, there's a lot of focus on patenting, there's a lot of focus, as I say, on high-tech sectors. However, the evidence of that spending translating into productivity improvements and innovation, that's where you have less information for China. I would just step back and also say, whether or not spending on R&D translates into innovation, innovation that we can all use, it's a big question for a lot of countries. And it's one of the conundrums or the paradox. This comes from a great economist, Robert Solow. You can see the computer age everywhere, except in the productivity data. So we all seem to be surrounded by tech. And yet, for all major economies, productivity growth is slowing. So is the investment translating into innovations that are improving productivity, wages, and standard of living? And this is hard, especially in the digital age, where this question is not just for China, it's for all countries. The other area I would also stress how much spending China is doing is China has, I think this comes from people who work in the climate area. I think it's invested more in the green sphere than all the other countries of the world combined, looking over several years. And there's great productivity possibilities from that, as well as, helping the climate. So, it's one of those areas where China is a middle income country. Its data is improving all the time. And, with more data, hopefully we'd get a clearer picture. But it is a huge challenge. But it's also, I think, for all the rest of us, certainly worth watching, because it would change, the world economy.
Let's pivot to big tech. I'm sure you've been following the recent news flow. Australia taking on mighty Google and Facebook. Do you think that's the beginning of something equivalent to regulatory breakup of big tech, or a forced, AT&T equivalent mini Baby Bells, a face and a book separately from each other?
Yeah, so, I think that's sort of the latest in a string of challenge to the dominance of some of these companies. Should they be paying news outlets for the news that they're putting on their websites? Are they stifling competition? Do they privilege their own search results? Are they, there's a whole range of competition issues. And it does remind me of the trust-busting days of the early 20th century in the United States, which did see the breakup of monopolies. So the difference to today is these are platform companies. In other words, they have one product that's enhanced by greater use across a network, and more people using it doesn't diminish the use of, the original person. So a platform business has this ability to reach scale, and that is somewhat different than what we saw in terms of industrial companies, where the product, wasn't put out in this format. If you consume something, somebody else couldn't consume it, obviously. So the divisibility is one of the differences, and that's why it makes this regulation hard. So the questions around competition are: do they stifle competition? Is the market contestable? So thinking about Joseph Schumpeter, are there startups that are able to come into the space and really challenge these companies, or do they just get bought up? So for instance, Facebook bought Instagram, Facebook bought WhatsApp. And when it bought Instagram at the time wasn't the size it was now. But Instagram as a competitor would have, in this where it currently is, would challenge Facebook in terms of being a social media company. And so one of the questions they're looking at in the United States is whether or not the decision for Facebook to buy Instagram was anti-competitive. Now that you look at what's happened. So I expect Australia, the US, EU, I expect this scrutiny to go on. And I do think there are echoes, in terms of history about this area. And I think one of the things that I would stress is, for creative destruction to work, you have to have entrants. So given the low fixed costs of especially a number of these tech companies, not all, because obviously some of them are hardware and there's higher, fixed cost to enter, but certainly in terms of a number of these which have very low fixed costs, is there enough that's done to promote competition? So again, fintech has similar issues in that fintech companies, the startups that are very successful, tend to be bought up by existing, banks and financial institutions. In the normal course, if that's done competitively, that's creative destruction.
Yeah.
And some
Linda,
some financial institutions might fail because of that.
No, but something relating to that. I mean, it's true. The startup cost, the initial friction in terms of startup cost, particularly with the advent of big tech, has gone down tremendously. But there is a pretty significant investment still required on the customer acquisition front, particularly when you're a B2C platform, and that's not that's not the stuff of small enterprise, mom and pop, two guys in a garage. So it is not surprising, perhaps, that big tech is the destination of choice for most startups, basically, because they're just gobbling up these. It's not just about R&D, but it's also about having that platform, as you referenced. That reach that has already been established, and the dollar is already spent on that. Let me ask you something else. You mentioned 18% of the S&P today is those big five. And I think there is another reference to 18% in your book, which is, the average age of an S&P 500 company in the S&P is about 18 in the last decade. Apple's been there for a few years. Do you think it's at all possible for something like an Apple to be, one of the case studies that we talk about 100 years from now as a creative destruction illustration from Schumpeter?
The answer is yes. I think the churn, so the rate at which companies are falling out of the S&P 500 has sped up because of the degree of disruption, and it's shortening the tenure of companies which are able to stay at the top of their game. And so this is, one of the, I suppose, counterexamples to, the dominance of big tech is that there's a lot more churn in big listed companies today than there have been in previous years. So clearly there are challengers. And of course, just on your previous point, the exit for a number of startups is to be bought up. So there's obviously, it's a complicated system, but the question is whether there's financing available to allow these challengers. And certainly in the United States, because these are US tech companies, that ecosystem exists. That's why there's so much churn. There's capital market financing is much bigger than bank financing in the US. And you do see, these companies, these challengers, these startups being financed. And that's what's causing the disruption that we see. So, will Apple, which is a great example because it's both hardware and software, they underwent a transition, obviously, with, Tim Cook taking over. And it seems as if they are still, quite ahead of quite a lot of the trends. But in 100 years' time, but on the current churn rate, not many of these companies will still be in the S&P 500. And, the challenge for dominant companies is the challenge that all dominant companies face, which is when you have a startup, they cherry pick the best part of your market. They're not going after the harder bits of the market. They're going for the lucrative parts of the market, cherry picking it, offering something better. And that's what gives the incentive for the dominant company to try and buy them, because they can see they're not, they're servicing the most lucrative part. But as we know, history is strewn with companies that seem dominant and then we're not. So you cast your mind back a decade ago, the world's biggest mobile phone maker was Nokia, followed by RIM that operated BlackBerry. Yeah. And and where are they now? And so the speed of change is huge. But that being said, Apple has a great product and they've kept on ahead of it, and they seem very innovative as well, I would also add, which is the challenge of being a big company. Having innovation in a big company is actually not easy. So a lot of companies try to have startup units, sandboxes, but how you keep that culture of innovation when you're in a big firm. I think that's actually something Apple has done well. And that's one of the reasons why it was, I think it was the first, company that was over $1 trillion, the most valuable, in the world.
Yeah. And maybe that's the common feature across the real big successes, the big five, as you said. Let me ask you, going back to Bitcoin, and you were referring to digital currencies. And in my mind, cryptocurrencies are different from digital currencies because, while digital currencies is just basically a central bank facilitated means of exchange in a digital format, crypto is outside of the remit of central banks. That's the essential. Do you think, and I think you touched upon this, but let me just ask you flat out, and you can, say even literally a yes or no. Do you think this Bitcoin craze mania, or maybe just increase in interest, maybe that's the lightest way to put it, is driven by a growing grassroots recognition that under current monetary policy for the foreseeable future, given the extreme fiscal deficit spending that has occurred over the course of the last 12 months related to COVID, there is effectively a debasement of fiat currency, that is on the horizon, and it is going to occur. It has to occur because it's inevitable. Do you think that's what is really kind of sinking in, and people are saying that printing press in Japan, in the US, in the UK, in Europe, most of the developed world, is going to keep printing, and the money that I have is actually not going to be worth as much as it is today, so I might as well go for an alternate store of value, even though it's quite volatile as of now?
I certainly think that is a driving force of the cryptocurrencies because of the limited quantity. I think they really started springing up, after the very loose monetary policies were introduced after the U.S. subprime crisis over a decade ago now. And so there is certainly, I think, that part of it. I would also say, with cryptocurrencies, there's so many different factors as well. So tech is actually a part of it. So taking payments within games, online gaming, that in and of itself is one of the degrees of comfort, I guess, people have, in using, currencies. It allows games to monetize, bits of it that they buy. And I would also say that, especially blockchain technology, so this ability to have ledgers which are secure and essentially enables the development of this. So even if there was this worried about fiat currencies and worried about fiat money, it's enabled by these various things that I've described. And yes, it is different than, digital currencies, the kind of e-currencies, which are essentially fiat money issued in electronic form. So one of the questions that people in this area often ask is, why are the central banks coming into cryptocurrencies if the cryptocurrencies are themselves, basically what's the driver for central banks to come in? And the answer to that is central banks like to control the money supply. So if cryptocurrencies grow really large and there's money which is moving around the economy that they're not able to easily monitor or take into account as they set monetary policy, they want to, to basically, to be part of that. And I think that's what's driving some of it as well. And also for central banks anyways, blockchain is a technology that is also valuable because of the ledger, part of it.
Yeah. But do you think there's also an element of a knee-jerk reaction or a backlash, if you will, to the perceived weaponization of the US dollar? Because, the previous administration in particular had been hyperactive in terms of using the US dollar to as a tool, geopolitically. Bitcoin or crypto mostly, circumvents all of that.
So I'm going to be saved by the bell on this one because I know we only have about a minute left to go. So I feel really grateful because that's a really hard question.
Okay, since we have a minute left to go, I'm going to ask you, if you don't mind, 10 rapid fire questions, just quickly, this is the speed test that you give to your students, Linda. And just reflect on the last 12 months in various shapes and forms of lockdown. What surprised you the most negatively?
Probably the realization we should all exercise more.
And positively, what surprised you? What was, the biggest positive surprise?
I actually think it's the Great Reset that people, it's hard to work from home. It's easier for some, but it's hard for others. But I think this kind of sitting back and taking stock that we are all forced to do, was a positive. You can really evaluate how many hours you want to spend commuting a day and, what you need to have a work-life balance. So to me, those are the positives.
And what did you enjoy the most? Was that what you enjoyed the most as well?
I probably enjoy the no commuting the most. Probably I'm going to be like many other people where, you do it because you do it. And then when you stop, you think, wow, I just saved a lot of hours of my day not commuting and crushed up against people on public transport. I mean, it's, hard to say you miss that.
What was most frustrating?
I think especially for a lot of, relationships are quite important. And I think if you have a base, then, you can move into remote working pretty well, but you have to make a real effort to keep that relationship remotely. And I think that for new starters, that's even harder. They don't have a base of relationships to build on.
And which place did you visit most frequently outside of your study and home?
Sorry,
which place did you visit most frequently outside of your study in front of the computer?
Which place did I visit?
Most frequently? Which was your favorite place to go to other than your study?
You mean you mean traveling? Sorry, I'm missing this.
Travel, step outside the house, basically.
Oh, I'm probably getting out to nature. So I think, you realize again, going to a park is a nice thing to do. And I think sometimes during lockdown, you're kind of limited. In the UK, you could have your one exercise a day. So you had to be very strategic.
Last question. Did you get anything done that you had been putting off for a long time, Linda?
Oh, yes. So I'm writing my next book, and not commuting has saved me hours that I put towards that book.
Brilliant. On that note, listen, thanks so much. This has been a fascinating discussion. We really appreciate you taking the time, but more importantly, sharing your unique insights with us. And then for those of our listeners who haven't read your book yet, both the old one and the upcoming one, well, the upcoming one will come out soon, but the older one, The Great Economists, it's a highly recommended read, guys. So please do go out and use your Amazon Kindle device right now, because big tech is here. Thank you, Linda.
Thank you so much, Rishi. Fantastic conversation.
Take care.
Thank you all for watching. Thank you.
Cheers.
Thank you for having me.